What's up, everybody? How's everyone doing? How's everyone's Tuesday evening? Doesn't feel like a Tuesday. Feels like, I don't know. How'd everyone's trading day finish? Pretty choppy and grindy session by the looks of it, right? So we did a pretty good job managing that today, I think. And green mostly, that's a good sign. Have you guys found the price action last, let's say, 5-6 days, right? Been a lot kind of grindier, a lot choppier. How are you guys managing that? Yeah, definitely the occasional torpedo candle, but like a lot less sustained easy moves. Right, I think that's the hardest thing. So like I love a torpedo candle when it's not just one of them, when there's like, you know, one torpedo and then keeps going for an hour. Those are the best. But right now it's like one candle and things stop moving and it gets exhausting fast. So I mean, that's probably the starting point here for any discussion here today, right? And then we'll open up things for questions. But I think the thing I want to address here is like the misconception basically over how to manage or deal with choppy markets. So, you know, I think the instinct that most people have when things get choppier or things get a little bit more annoying, we'll call it, right, is they want to widen their stop losses. So they want to think, or they think, okay, if I have a stop loss at 10 points, I keep getting faked out. If I make it 20 points or 30 points, I won't get shaken out of my positions and I'll end up in more trades that are green. And that idea in itself is reasonable, but it effectively sets you up or sets the trader up for like an all or nothing decision, right? Or a right or wrong decision. So what I mean by that, right, is you're putting all your eggs into one basket. You're basically betting that regardless of how choppy the market is going to be, you're still going to find a way to get the direction correct. And if your stop loss widens up so aggressively, you likely only have room for one or two decisions before you get tilted or before you get frustrated or you've lost too much money where you have no choice but to feel like you have to walk away. The alternative to that is to basically do the opposite, right? Tighten up your stop losses, increase your ability to take more shots on goal, and basically look for opportunities where you can have asymmetric upside in your trading decisions. Now, asymmetric, right? It's going to be relative to everybody's like win rate, right? So asymmetric for one win rate might not be asymmetric for another. But in general, if your average win is 2 times or 3 times as big as your average loss, and you're targeting trades where your max profit is only going to be 1 times your average loss, you're not really creating that asymmetric upside for yourself, right? Relative to your account. So finding what that balance is and actually embracing the mathematics and the variance behind trading will make it a lot easier to manage your risk, maintain your mental capital, and actually finish the day in the green. So you, instead of having, you know, one chance at a move, you can have 5 or 6 chances at getting the direction correct on the day while still maintaining the same amount of risk, keeping the same amount of upside, and hopefully maintaining a lot more mental capital, which means that you won't screw up your strategy when things do start to move in your favor. So you guys get what I mean by that. And that's something we try to focus on a lot in DTR, right? We try to keep our stops really tight in general. And today we were taking a lot of like 5 point, 6 point, right? 4 point those types of entries. And so that's the logic behind it, right? I would rather make my win rate kind of fugazi, right, where it's not super relevant on the day, but increase my surface area of being able to get that base hit that ultimately pays for all those swings. So we got that, our first chunk out of the way here. Let's open up the floor to questions. What do you guys have? What do you guys want to go over this afternoon? What's on topic? And how can I help? Fire away. Bijou, fire away. Which ones? Two-min candle at 1454. And this is Eastern you're talking about here? So this candle that my finger's pointing to. Okay, what's your question about it? Well, I would start from a simpler context than that, right? What's your setup? Hard to look at this as a reversal because it's not reversing off of low of day. It's hard to look at this as a breakout because it's not breaking out above the opening range high or above high a day. So I don't view this candle as even being an active setup, right? To a certain extent, the way that I want to view it is that as long as price action is like moving towards the lower ball or like the lower opening range, right? If it isn't coming from a failed breakout, then probably don't want to be looking for bullish moves inside the range, right? We're going to visualize this a little bit differently. You know, the close of this candle is there. The low of day at the time was, let's call it right there. And the high of day was this. So if we're looking at, you know, what your risk reward ratio was, you just hide price action for a second. Can I hide it? There's a way, but imagine, right, that there's nothing there. Your risk is like 100 points to make 180, 110 to make 180. So that asymmetric upside concept, right, doesn't really exist in this candle. So this volume, even though it's amazing, it's not preceding any logical reason for me to be interested in playing this to the upside, right? Where even though it did give us really good volume, the price structure here was still fundamentally bearish because we were below the opening range low and we had no evidence of bears failing recently. So I'm in effectively now the middle of the range and it's just noise. So for me, this would be something that wouldn't be particularly interesting. Now, when you start to get to something like this candle here, right, or potentially even this candle at 1558, now that's preceding, right, a failed breakout to the downside. You've got an indication that bulls are in control. And now your risk reward equation, right, is a little bit different. You're risking, just even as a base setup, right, 95 points, we'll call it, right, to make 240. So just from like a market structure perspective, it's a much more favorable setup where you can take this 3 times and only 1 out of 3 times needs to hit for you to be profitable. Whereas the previous example, right at this candle, you need to be green on this, 40% of the time, right? Something along those lines. And then even when you are, you're barely just breaking even, right? So you start to really limit your upside in those circumstances, and it makes it a lot more challenging to be profitable. So don't just fall in love with volume. Fall in love with the sequence that volume needs to support. So you need a reason to be interested in taking the trade. And then if you see a setup trigger, right, which is a breakout through high of day or low of day, or a breakout through the opening range, or then obviously a failed breakout at high of day or low of day, if one of those things happen and then you get volume to support that narrative, now things are stacking up, they're syncing up, right? They're telling you the same story, and you can start to be more curious into making a decision. But if we're just going to get volume bars in the middle of a range and just fall in love with every increasing volume standard, then we're just going to end up chasing a lot of false signals and a lot of kind of garbage price action that's just noise and random. And so we want to avoid those scenarios and really hone in on only our highest probability events. Make sense? What other questions we have here? Who's next? Any other questions, Bijou? Any other candles that are catching your eye today? What do we got here, team? Any other questions? Can't be running out already. Come on, challenge you guys. Come on, everyone ask one. So 11:06 Eastern. Yeah, but the thing that's missing on this candle now, right, is the increasing volume. So better setup trigger, right? Failed breakout, but you have no increasing bullish volume here to indicate that bulls are back in control. Right? So confirmation needs to be a strong candle shape plus increasing and outlier volume. This is a strong candle shape, but it's decreasing volume even though it's outlier. Yeah, what about prop firms? I mean, it really depends. It's basically an open source document created by our members in our community. I will say that officially, the only prop firm that I recommend is daytraderfunding.com. That is for obvious reasons. I'm the owner of that prop firm. So, all those other suggestions are basically what the community has had success with. And I don't want to really comment more than that. My official recommendation is to use the coupon code you find here for your daytraderfunding.com account, and you'll get 80% off that way. So, great question, Michael. I got very emotional today after losing a few trades. Should have walked away, didn't. Do you have any advice on how to be disciplined, to retreat today, to fight tomorrow, especially when emotions run high and willpower runs low? So that's a great question. I think there's two things there that we probably want to address right off the bat. So the problem with willpower, right, is that it kind of depends on how you woke up that day, right? How strong was my cup of coffee? Did I get a good night's sleep? Do I feel sore? Whatever, right? How much nonsense is going on in my life? Whatever it might be. So that's a very unreliable metric to work off of. Instead, what you want to do is you want to cultivate like muscle memory effectively, right? And what your signal today tells you is that your position sizing for the loss that you took, for the conditions that you're trading, whatever it might be, was too aggressive or too high or too emotional, whatever it might be. So step number one, right, is deciding that you have a walk away trigger. Today, you felt that trigger and you decided to keep trading. So simple decision, right, is to go find something else to do with your life. When you're not trading well and you're in a period of tilt, like you're going to lose money. 9 times out of 10, you're going to lose money on that next decision. You're not going to make it all back and make yourself feel better by now being profitable. So once you believe that and you have enough evidence of that and you get sick and tired of doing that, it's actually like a relief or a reward or a perk sometimes to go for a walk outside, right? To go make yourself a cup of coffee, to go do 15 push-ups in the other bedroom. Just something to break that routine. So step one, be more proactive so that triggering the response that requires willpower to be a lower probability event. I didn't phrase that super well, but hopefully that makes sense. And then decide now, right? Okay, today I felt like this and I knew I was tilted and I could acknowledge it in the moment, yet I still decided to trade. Next time I feel that same trigger, I'm going to go do X or Y or whatever it is. And then practice doing it. The other limit you want to do here is you kind of want to prove to yourself that you can do it a couple times before you get asked to like pass the test again, right? So then now implementing or adding all of these quote unquote guardrails to your trading psychology, they work in practice, but you got to make sure they're all wired up. So, maybe it's, first trade, I'm green, I'm done for the day. Second trade, I'm red, I'm done for the day, right? Maybe a rule like that, where you're practicing the walk away from your trading day without it hitting that tilt reflex. And then when it does get down to that point, you'll have a lot more practice of doing that in the past, evidence of you recovering from those small red days also in your past, and then hopefully a much more deliberate nervous system for when everything gets squeezed again. So kind of a 3-step process, right? Size down, step one. Step one, size down. Step two, note down what that trigger was and your decision on what you're going to do differently next time. And then step three, practice walking away in lower consequence environments with a simple rule. If my first trade of the day is green, I'm done for the day. If my second trade of the day is red, I'm done for the day. And from there, I think that'll give you a really good baseline where that tilt feeling will feel a lot more manageable. As like a practical tip, I heard this in a what's his name? Tony Robbins YouTube video once upon a time, and he was asking someone, brought someone up on stage, and he asked him, if you were to describe what a stressed out or depressed person looks like with your body language, what would you do? And pretty much immediately that person hunched over, rolled their shoulders, destroyed their posture, and then started taking kind of like sharp, not really controlled breaths. And I think, at least for myself personally, that's often like body response when I feel stressed out about a trade or I feel agitated about a trade. And if I can catch myself in that posture or catch myself in those moments where the breathing is getting really short or something like that when I'm trading, only when I'm trading, I can't seem to do it in any other context, then I can kind of take back control over that emotional state and almost let that tilt feeling just like melt into the background a little bit, right? Where it becomes gentle. It doesn't really sting. It becomes, okay, just another fly on the wall, right? And I think that often, like the feedback loop of like reclaiming my posture kind of snaps me out of it sometimes. So I would look for similar traits or, body language things that maybe you put off that you don't notice immediately. And, look out for those types of triggers because they can be extremely powerful in telling you how you're about to trade. Yeah, so you're setting your stop loss based on 10-point range. What I would say then, Carter, right, is you can just drag it up once your order is entered to where you want your stop loss to be, right? So if you're buying that discount and you're looking to buy that price better than the reference, it will default to giving you a 10-point stop loss based on that tick you give it. But once the order gets executed, you can just quickly drag it up to where you'd like it to be. I would find that to be probably the simplest process. It would mean that you don't need to change anything from your trades, and then you can adjust your stop loss to exactly where you want it to be. Worst case scenario, right? You lock in the amount of risk that you are happy taking. Best case scenario, right? You still lock in that discount. The other thing that I would just add to that, right, is there's basically pros and cons to everything. If you have a 10-point stop loss, regardless of where you want it to be, there are going to be times where you don't get faked out, where I get faked out, for example, right? Or scenarios to the flip side where, I take a small loss and you take a full size loss. So there are alternatives on how you can manage it. But if you're not happy with the 10 points of risk, then I would start setting smaller and smaller and basically adjusting for that. For example, like if your stop loss was going to be 26, 7, 10, and you want to have your stop loss to be at 100, right? And you wanted to get in at 07, then you just set your risk to be 7 points. and you kind of just find your flow that way. It's a little bit clunky, maybe adds an extra step, but it should still hopefully accomplish the same thing without necessarily compromising your entry. The other benefit of that technique, like we're describing there, is that it actually makes it a little bit faster in executing your trades, right? Because you only need to set one number for your stop loss. And once you set that number, you can enter and adjust to where you want it to be after. So it gives you an opportunity to really focus on your execution, which I don't think is necessarily a bad thing. But look, all of these things have pros and cons. It sometimes feels like they're cons when they're things that we're not used to, but there's always workarounds and ways around it. What else we got here, team? I don't want to sound like too snobby here, so bear with me. But I think too many people put too much stock into like the trading platform, right? Buy and sell buttons exist everywhere. They all do the same thing. It's going to be the same data feed, right? And the same price. So don't worry necessarily about, do worry enough where you can get your execution to be mechanical and, knowing what to click and how to click it. But put your energy and your focus into your execution technique, not the platform, if that makes sense. Platforms come and go, right? They will change. Their updates will happen without you having any input. Put your energy into the thing that you can take with you when things do. Now, what are the questions we have here, team? What are the questions we have? We've had 3 where I've had a chance to open up the gas pedal and rant and rave for a little bit. What would you call the last stock market crash? In your opinion, what's the last stock market crash? So 2008, I was still in grade 9, I think. So no, I was not trading in 2008. The pandemic crash, I would call that one to be a pretty decent one. And then we had a pretty good year-long bear market, maybe 16-month-long bear market. That was pretty interesting to trade. What I would say is, especially to the downside, a lot of the reason why these crashes happen is because liquidity just effectively gets pulled from the market. So if liquidity happens or liquidity gets pulled, it's better to do it from SPY. If liquidity gets pulled, right, momentum concepts struggle a little bit because there's just not enough volume in there. So means you get a lot of slippage, means you get a lot of random fills, a lot more fake outs, a lot more shakeouts, and just environments that are a little bit more unpredictable to change. The reason why I specifically asked you what you define as a crash, for me, what I would define as a market crash is where you get a period call it a week, a month, a year, where there are multiple like circuit breakers or limit down days. So the exchanges will have limits on how much the index can sell off in a day before trading is halted for like 15 minutes, and then it can resume. Once it exceeds a certain period or a certain percentage, then trading is halted for the day. So for me, a market crash would require at least a few of those events. And the last time that we saw like circuit breaker halts consistently in that context was the pandemic crash. What the thing that's challenging about that, right, is markets will literally stop for 10, 15 minutes, sometimes longer, and you don't know where the market will open. So you can open either extremely profitable or extremely broke. There's pretty much no middle ground. And yeah, it just creates a lot of uncertainty. And because the exchanges are halted, literally zero orders are being exchanged. So you have nothing you can do. You're kind of at the mercy of the gods, and you're just hoping that when markets open, you're back above your price. In general, you trade it in the same way we would trade like a choppy market, where you'd want to have multiple cracks at the apple with tight risk and small sizing, and your position sizing basically becomes your stop loss. And in an environment like that, I probably would not be trading futures to the downside. I'd probably trade options to the downside. That would cap a little bit more of my potential risk if there was like a gap down event. But yeah, fuck knows, truth be told. More than anything in those environments, is my emphasis is on trying to find the leading names that are holding up well relative to what the market is doing. So I'm looking for, which of the Apples, the Teslas, the Microsofts, the Facebooks of the world are giving me a really good discount. And where price changing hasn't materially changed their business. I'd rather take an opportunity to load up then. So there are no upside circuit breakers. They won't halt trading ever to the upside, only to the downside. What do you mean by will it stop mid-trade? What do you mean? The only what's the best way of phrasing it? Only time I've ever seen them do them is they'll do them at like exactly at when the minute starts, right? So if you're in a trade and the circuit breaker happens, you will be prevented. You won't be able to do anything with that position for 15 minutes at the minimum. You'll be stuck. And so then when it opens up, it'll either open up higher or lower, or maybe the same, but not great. It's like, I don't know if you guys have, for those of you who've traded small caps in the past, it's a lot like that, right? Where names can get halted for whatever reason. And if you're halted and then you're kind of stuck on the wrong side of it, it can be real nasty. I mean, circuit breakers telegraph themselves to a certain extent, though, surely, right? So it's only going to trigger in once the market is down 5% on the day. So like the number isn't arbitrary. Like it is pretty like it's coming. So you can prep for it, and when or if we get to a period of that type of volatility, we'll have those circuit breaker zones mapped out very clearly. The exchange will publish them for us. What else we got here today, team? What are the questions we have? A nice variety this afternoon. Like I would say you're more likely to see it in something like CL right now than you are in the indexes, right? Crude can move 5%, no problem. What are the questions we have here, team? What are the questions we have? Sure, which one? When a person isn't funded and getting their buffer, what do you suggest is a good drawdown? Keep your drawdown to be the same as it always was when you started, right? That would be my recommendation. So let's talk about our winning setups maybe first. Right, we played. No wonder it looked different. Basically, we played these rejections, right? And this downside move here this morning, right? So this was what our objective was. We were looking for that downside break after the failed move here to the upside. So one attempt to break out, that fails, fine. Breakout attempt number 2, that fails, fine. And then confirmation that bears are in control at this 1018 candle. And then eventually you kind of get this nice little follow through. The problem we had with today's market, I guess, if you want to call it anything, is that once our signal or our setup and confirmation was in place, it just kind of wanted to like break its back a little bit and round up before it wanted to break down. So it made the entry timing just a little bit frustrating in general. But today's setups, right, were mostly failed breakouts and then reversals back to the downside. The 1018, same thing. Yeah. The reason we didn't trade it on the 1018, I just never got the fake out, right, on this candle here. So when this candle broke down, it pretty much broke down right away. Never gave me that fake out higher that I was looking for. So we switched to the 3-min time frame where we could initially attempt it here, and then we eventually did get it on this crack and went down lower. Usually what I'd recommend you do is go on my YouTube when you have some time and go look at my past trades. There should be like a couple hundred of them that have been recorded and filmed and edited. try to post every day's trades up on YouTube, usually like 24 to 48 hours after they've happened. So, if you ever want to watch them back, they're all there for you to take a look. I think that would be a great resource for you. Just help you train your eye just a little bit better. I appreciate that, Shirley. Nice. Good. Any other questions here, team? Any other questions? So are you asking, Braden, at what point do I stop trading even if the market still gives me A+ setups? Is that what you're asking? So philosophically, I think that everybody has multiple numbers that break them, right? Or that break your will to live as a trader, or make you annoyed, or make you frustrated, or tilt you, or whatever sensation you want to call it. So that's really depend. Like, everyone's got a different, we'll call it magic set here, but you have a P&L number. So if you make X or lose X, you can no longer be trusted. If you take X amount of trades, right, you can no longer be trusted. And if you take X amount of losers in a row, you can no longer be trusted. So I think that the answer to that question is sort of dependent on each individual person. For me, like, I would say that my max loss number kind of hovers in the 1.5% to 2% down range, as like a percentage of my account balance. That for me is like when I start to feel a little bit pressure, right? Would be probably the right adjective. I like the strikeout rule. So if I take 3 losses in a row, or 3 trades in a row that just don't really move, or I caught myself making a mistake on them, like I chased them or something like that, then I should be done for the day. And then I have a time of day rule. So, if it hasn't been my day yet and it's like 10:30 in the morning, and I know that my kill zone's from 9:30 to 11, you know what? I'm probably not going to try to punt a Hail Mary and hope I get lucky. So it's kind of figuring out or working backwards from what you perceive your numbers to be. Once you have a perception of what your number is in each category, it's probably taking a hammer to your ego and making that number even smaller. And then kind of going back, we talked a little bit about the how do you walk away from a trade? Well, it's easier if you practice it and if you do it with smaller size, and you can basically practice it in lower consequence environments. Should be the same thing. You got a snip of a day that doesn't feel right, go and touch and smell the roses, or put your feet on some grass, or do something, and just get used to rewarding that feeling. There's just going to be days where you just don't have it, and if you force it in those days, you're just going to compound your misery and probably make things worse. Because I've said it before, and I'll say it again. I won't always be the most civilized or the gentlest, or I don't know, whatever other adjective you want to call it. I'm certainly no socialist princess. I take trading very seriously. It for me is something that I'm deeply passionate about. It is my favorite thing I do in this world. Just about. It's what I think I was supposed to do with myself or with my life. And I think that trading is an exceptionally competitive game that requires a level of seriousness and intensity and preparation, however you want to call it. I would hope that we understand, and this can sound terrible, but there's a difference between who I am when I'm trading and who I am when I'm not, right? The intensity, the focus, the sharpness in the middle of a trading day brings out a different version of you, in the same way that Kobe Bryant had a Mamba mentality, like effectively like a character he played or he created to become the most fearless and ruthless competitor. You kind of have to find your own version of that if you want to do well trading. You got to find that character that you can play that doesn't tolerate your own bullshit. And I know that I don't always provide a very good example of what that looks like in the stream. That can often look like anger or resentment or frustration. And those aren't exactly pretty adjectives for anyone. So for sure working on it, but understand that there are two different variants there. I don't want you guys to feel scared off or intimidated or like you can't ask questions or, oh, fuck, Michael's going to snap at me if I say this. No, I won't. I'm a fly by the seat of my pants kind of guy sometimes. And I promise you guys, it's never personal. I'm never keeping score. I'm never remembering, oh gosh, David asked me 6 questions in 6 days. What a dumbass. No offense, David. Sorry to rag on you a couple days in a row. It's not like that, right? So, yeah, please don't misinterpret the intensity with anything other than I want you guys to be as successful as you possibly can. To me, this is my form of showing respect to the market, giving it my absolute focus, and trying to give my absolute best to my trading. That I think is like the only thing that I can control. And if it means that other things maybe aren't as smooth, I'm willing to make that compromise for 90 minutes a day and play that character, so to speak. And I think that that has made me a much more successful, in control, less just self-sabotaging. Like I don't do it as often because I think it becomes like something that you can step into every single day. Becomes like something you get used to. It's almost like a fighter pilot stepping into his cockpit, right? There's like a routine to it. Or, hockey players, they'll do their left boot and then their right boot and then their left shin guard and their right shin guard every single time. There's like a routine that gets them into the rhythm. Find your version that is the selfish trader who is doing not what's best for them in the moment, but what's best for them long term. And you find your adaptation of that profile. And I think you'll find it a lot easier to gamify fixing a lot of your trading problems. It'll be like character development or seeing your favorite character go from season 1 to season 2 type thing. And I think that finding your own Mamba mentality or like your ruthless killer edge, your extreme zone of focus will have a lot of benefits to you in your trading. And it doesn't have to be pleasant. It just has to work. I mean, Michael, everything that you see me trade on stream every day is exactly how I trade every day. Right? So that would be the exact same strategy I use to pass evals and get payouts and do all those things. I don't take any trades that I don't show you guys. Last time I blew an account, October-ish, probably in that range. But at the moment, guys, I'm purely just trading my personal funds. I haven't been trading my props for about 6 or 7 days. They have all been shut down. So what's the biggest lesson / takeaway from your experience at the hedge fund that makes them successful? I don't know if I necessarily, we didn't phrase it this way when I worked there, but a very famous Jim Simons quote is that the number one rule of systematic trading is that you don't break your rules. And I think that there's always a really smart sounding reason to not take a trade in the moment or to talk yourself into thinking this time's an exception. And generally those things are pretty brutal. What I would say is the routine and the structure and the frameworks that I use, the math basically that I use, those are the valuable things that I took from working at Arain. The thing that, I would say changed, I guess, is when I started working for myself. I guess I didn't appreciate how much support staff I had besides really how much support staff I had at the fund that made my life easier versus what I had being self-employed, right? Zero. So instead of having people that would, do a bunch of stuff for me, I had to learn how to replace those roles and, just change a lot of those processes. So working for a fund, working institutionally was very different than trading retail. And I didn't have any risk effectively working institutionally. Like it wasn't my decision over where the 11 billion was allocated. It was my job when they said, point your machine gun here. It was to point and fire and not ask questions, right? So, it just was a graduation more than anything. And, I would say the mathematical frameworks are probably the thing I got the most out of it. So max loss per day should be no more than 1% of your total account. So it should take you 3 max loss days in a row to blow your account. So for like a 150K, starting point per trade should be like $500. And then as you start to get payouts, as you start to build your buffers, you can increase your risk from there. But that would be the starting point. Any other questions here, team? Any other questions? Don't like them. I have no evidence to indicate that taking partial profits actually ends up making me any more money. Most of the time, it just ends up pulling back 10 points and then stopping me out and then running. So in my experience, I have no evidence in my trading that it actually makes me more profitable. I would recommend that you collect the data on your trading and see. 2 or 3 weeks of doing that, you'll know pretty quickly on if you're leaving money on the table or if it's making you more. Rely on facts, not feelings, and create facts off of your own trading data. Don't use like someone else's confirmation bias. Okay, team, final call for questions here. Final call for questions. Yeah. Speak now or forever hold your peace. Good. I appreciate you guys tuning in. I like doing these one-on-ones or these group calls. I think they're good. They're a good addition to the one-on-ones. Maybe I'll see if my video editor can maybe edit up all the sessions, each individual question into like a video FAQ. That might be some value to some people. No promises, but that might be an idea. Maybe going forward, maybe it might be not too easy to backfill it, but going forward, that might be something we can do. All right, guys. Well, appreciate everyone tuning in. See you all in, 12 hours. Good luck. We'll have a great trading day tomorrow. And yeah, if you have any lingering tech issues or things that are stuck, please send an email, backoffice@daytraderfunding.com. Taking care of a few more of these here this evening, so please don't hesitate. We'll get you guys all taken care of as soon as possible. All right, cheers.